The broadcast is now starting. All attendees are in listen-only mode.
Hi, it's Bruce Dorr-Palin from the National Housing Resource Center. Welcome to the Leaders in Housing Counseling call, and we're going to start in just a quick moment. We'll get started very shortly. Do you have a lot of people on already? Hi, it's Bruce Dorr-Palin with the National Housing Resource Center and Matthew Gaudreau from the National Housing Resource Center. We are both essential employees and still working here. And that's a joke because we're not government funded. But we want to dive in today on our call, and we're going to try to cover a lot of ground on a range of issues today. This call today won't have a consistent theme. We're going to try to move forward on a number of key fronts that affect the housing counseling industry. So, as all of us are deeply aware, we are right now in federal government shutdown mode, and we wanted to just open up a call with a conversation about how this is impacting the housing counseling industry. So if you have some observations, please put them into the chat box so that Matthew can retrieve them. But a critical thing here is right now that we are certainly seeing that a number of key offices and programs are not working right now. The one we put out just most recently was that the call tomorrow with on the FHA Back to Work training program, that has been canceled. I'm sure it'll be rescheduled after the shutdown, but that won't happen. But Matthew, why don't you give us a quick rundown? How did we get here on all this?
Yeah, thanks, Bruce. So, I mean, we've been kind of keeping everyone posted on these calls, so it's shouldn't be too big of a surprise. But really, the kind of sticking point started happening about 3 weeks ago, when I think we've talked about this before, but really it's just a small group of maybe 30 or 40 kind of far-right Republican House members made clear that they were not going to support any funding bill that didn't include some provisions to, and it's kind of changed forms, but essentially to undermine in some way the Affordable Care Act or Obamacare. And just to, the way that it works in the House, so there's 234 Republican House members. They need 200, or a majority vote in the House is 217 votes. So the Republicans can really only afford to lose 17 votes in order, or if they lose more than 17, then they no longer have a majority. So this relatively small number of House Republicans has been able to kind of pull the whole conference along with them and insist on these demands around Obamacare. The House and, the Senate Democrats and the White House have made very clear that they have no intention of negotiating around Obamacare, and so that's how we've got this stalemate. So no funding was passed as of the October 1st deadline. No budget agreement was reached, and so we're now in day 3 of the shutdown.
And are all agencies affected by the shutdown?
No, so it doesn't affect, most agencies are, but some are not. We will have on the call in just a little bit Ted Wartell from the OCC. So there's a handful of agencies that are not funded by the regular appropriations process. Some of the ones that are relevant to housing counseling that are funded by a different means, so don't end up being affected by the shutdown, are CFPB, OCC, Fannie and Freddie, as well as Ginnie Mae, the Federal Reserve System. But probably the most important agency for the housing counseling industry is HUD, of course, and HUD is certainly affected by the shutdown.
And I understand also that in Treasury's deeply affected by the shutdown, but that some employees are funded by HARP. I'm sorry, by TARP. Change that. It's TARP, and the TARP funding is ongoing. It's not a year-to-year appropriations, and so some of those employees are in place, and the MHA programs in general are functioning. Let's see, so how does it impact? So tell us about HUD. What's the story on HUD?
So HUD is unfortunately one of the most impacted agencies. So the way that the shutdown essentially works is that federal employees are classified as either non-essential or essential, or they sometimes use the terminology accepted or non-accepted. But essentially, employees that are considered non-essential, and generally the standard is the protection of life or property, the folks are furloughed at this point. At HUD, it's 96% of HUD's employees who are not working. So it very much impacts HUD's ability to do most of the services that HUD would ordinarily provide. They're not able to provide in these circumstances.
And on the HUD housing counseling funding?
So there will not be a housing counseling NOFA released as long as the shutdown goes on. That's really the biggest impact. The grants.gov system is still up and running, so if there are existing funding opportunities that counseling agencies are interested in applying for, you can still submit an application. It's unlikely that HUD will actually be processing the applications, collecting them from grants.gov and assessing them in the meantime, but you will be able to submit them still, and as soon as the shutdown ends, HUD will be able to access them.
And in terms of meetings that HUD has scheduled, monitoring visits, technical assistance, trainings, all that stuff, where does it stand?
And so almost none of those things will be happening. You already mentioned the back to work call for the FHA back to work loan that was scheduled for tomorrow has been canceled, and anything, as long as the shutdown goes on, unless it's a meeting with some non-essential staff, which, as we said, it's a very small percentage of HUD staff that are considered essential, meetings will be canceled, trainings, all of those sorts of things.
So then people who are in public housing or in getting the housing choice vouchers and the tribally designated housing, how's it going to impact them?
So HUD's, as long as the shutdown is in effect, HUD's not going to be able to fund additional payments to either public housing or Indian housing authorities. So their thinking is that there is sufficient funding for October, they expect that that the PHAs and TDHEs, the tribally designated housing entities, should be able to continue providing the rental assistance through October. There's some question if the shutdown were to continue to go on into November, then there would be some question about whether those entities can continue to provide rental assistance. Their HUD instructions are to contact the actual local PHAs and TDHEs if you have questions or concerns about that.
And so how is the shutdown going to affect FHA insured loans in terms of getting them processed or closed?
So FHA does still have a limited number of staff that's continuing to work on processing and closing FHA insured loans. And that's an important point because there had been some confusion initially in the HUD contingency plan. They had at one point said that there would be, and at one point said that there wouldn't be. But they've made clear that there will be folks doing those functions still. But it is a limited number of staff, so it could be delayed. But they will still be doing those.
Okay. And do we have any questions pop up? We're checking the questions right now.
No, we don't.
Okay.
We have some comments and some gripes, I think rightly so, that related to funding and the such, but no questions that we're going to respond to at the moment.
So this is an extremely frustrating situation. It's very frustrating for the people at HUD, the few that I've been able to talk to, and at Treasury, and it's obviously not a good situation, not a way the government should run, and hopefully they get to a resolution soon. This is really impacting all of our work and also the ability for affordable housing to move forward in appropriate ways. So I'm going to move on to HSBC. So quite a number of you actually participated in identifying problem cases from HSBC that were old household or beneficial loans, and getting them to the Federal Reserve. They had asked for 30 loans. I think we put on the slides 45, but we're probably closer to 50. We'll probably end up getting closer to 50 in the end. They're not guaranteeing they're going to review all of them, though I can't understand why. It's not that many loans. So I'm hoping they will get through all of them, looking for violations. Their commitment to us was they were going to both, where they found violations, both press for systemic solutions, but also to try to deal with those individual cases and get solutions for the homeowner. The one thing is that they have said is that because of their regulatory role, they are they're not going to actually tell us what they have done. So hopefully you'll hear about it from your clients. We're going to appeal and ask them to. I don't quite understand it all, so I'm hoping that they may actually be able to tell us in the end some summary of what happened or some information, and we'll try to pursue that. And if we can learn about it, we will pass that on to you as well. There is one more piece that's pending on HSBC. So we told HSBC that about a lot of the problems that were occurring and that it would come up as an issue with the Fed. And they asked for examples and for a meeting. We'll do it as a telephone meeting, but this will be with their very, very senior managers and top credit risk officer and underwriters. And so we need to, out of the deals that got submitted, we need to really identify some that you feel like are just gross violations of especially around either people couldn't get the 6-month forbearance agreement, sometimes called loan modification, or they could get it, they couldn't get it because they couldn't pay the upfront funds, or they could get it but they could only get it for 2 or 3 times, and then they were disallowed. And HSBC's version of it, to me, was a much different description of this program than what we're hearing. So we want to give them, half a dozen examples, and then they will look at those files, and then we'll need to have the counselor on the line. So if you think you've got those examples already in place, please shoot me an email. We're going to need to put this together next week. The call will be in the end of October, but we need to give them the stuff ahead of time. And we want some really, if you want to go head-to-head with an underwriter, this is the opportunity. I'll be there to support you. I've done a lot of these in the past, and they're really, really helpful in terms of changing the system. So it'd be great if you can help participate with that.
So we have not a question, but a comment that you may want to respond to. The person says, HSBC has refused to participate in hardest hit fund programs in Arizona per ADOH. Is that something that would be relevant to what we're looking for?
I mean, we should certainly raise it with them. We could certainly raise this issue with them. The particular call we're talking about is going to be around specific deals and trying to get them to do right in the loss MIP process, but them engaging in the bigger process. There are many, many places where HSBC has not done what we would think of as sort of standard business and appropriate ways of handling their relationship with their customers and normal loss mitigation stuff, starting with not participating in HAMP, which all of us know has been one of the problems we've had with them. But on the bright side, we have now an opportunity with the OCC. They have a team of examiners who are going through, are looking at the inventories of files, looking for problems that have occurred, and what they did is ask us as the housing counseling industry to provide a number of strong examples of violations in the loss mitigation process that we could then elevate as cases to them and use to clarify where things aren't working right with very specific servicers, so that we can start getting our arms around this. And the OCC has also, very clearly and confidently stated that they will use, that they will both look at dealing with these as systemic problems, but also in the individual cases that get submitted, they'll work on getting resolutions as well. So we had Ted Wortell on a month ago, and we're now up and running and ready to go. I just shot the spreadsheet around to, hopefully to everybody, but we had circulated it earlier in the week as well, along with the description. But Ted, it'd be great if you'd just give us an overview and a good sense for people about what they need to do in order to submit files and help get resolutions for people.
Okay. Thanks very much, Bruce. It's always nice to be referred to as the bright side. We don't always, I don't always get that. So thanks for that also. And let me start with another thank you in advance to everyone for helping with this project. Bruce gave you background on what we hope to accomplish with it, and we talked, it's good to be back, and we talked last month about sort of what the project is and what we're looking for. Let me go over that again just very quickly, and then to the extent that people do have files that they think that are prime examples of violations of these issues for these servicers, I'll go over the process we've set up for submitting those, which hopefully is fairly straightforward. I've done it a bit, played around in it, and it worked pretty well for me. So we'll start with that. On the first slide, this lists specifically the issues that we will be reviewing is this part of what we call the enforcement of the consent order with the servicers. The servicers are listed on the second slide, so we'll get to that in a minute. So what we're looking for then, and it's not a lot of files, but your best examples, one or two examples. We've gone to other groups as well, so we feel like we'll get there in terms of volume. Examples of real failures on the part of the servicers in these 5 areas. Single point of contact, and the other areas having to do with modifications and conversions and false denials and dual tracking and issues of timing. And I think in order for us to be most effective in what we're doing, they should be recent examples. So things that occurred in 2014 and are hopefully still active. And
2013.
Did I say 14, 13?
We're not going to have any problems in 2014.
I got, I live in fiscal years, but and the more documentation, the better, I think, is the most helpful. And then for the list of 10 servicers is on. All right, so there's the slide. So let me go over the process, if you're able to do it, for just a minute. You could call it 2 steps. For those of you who played in string sections of your orchestra, I could call it 1.5 steps. But the first thing, if you have, let's say as an example, if you have 2 files that you want to submit or, whatever, you already have the spreadsheet. It's very simple spreadsheet. I don't know how many columns total, but what we really need is the name of your organization, the name of a contact person who we could talk to if we needed to talk to someone. I'm not saying we will, but we want to be able to if needed. Email address and phone number. Okay. There's some other columns there that indicate if you could just check those for. So you're putting a list of your files in this spreadsheet. And so there's a column for what the issue would be, and there's a column for who the servicer would be. That would be very helpful for us to have in terms of sort of planning how we distribute this out to our examination team. But what we really need are contact name, organization, email address, and phone number. So if you were submitting, 2 files, you would list them on the spreadsheet. You'd have 2 rows with those elements, and you would send the spreadsheet to the email address that's in the note that Bruce sent out earlier, borrowers.files@occ.tras.gov. That's me. I would take it, and very soon thereafter, you would get what you will end up doing is uploading those files electronically to a secure portal here at the OCC. So you'll get an email back from me, which would give you the link for that portal. It'll give you a temporary password that you use to get in, and once you get in, you can change it to something that you're more comfortable with or used to. And you'll also get some instructions on how to use the portal. You may have used similar sorts of things before. It is, as I said, I have been in it. I have tested it out. It's straightforward. I think that the directions I tried to make them as usable as possible. And if there are any questions, well, I'm sorry. Let me finish that. So you would simply then use the link, use the password. Once you're in the portal, there's a folder for you to upload the files to. So 2 additional points. The naming of the files that you upload to the portal will be important. This is covered very clearly, I think, in the instructions for how to use the portal. But the name will have to include the name of the servicer, the type of issue, and the sort of a borrower number. So if you've got more than one borrower, more than one case, so I can tell that they're separate. And that part will come, again, as you get your instructions for how to use the portal. Then you upload to the portal, and we will take it from there. The other point I'll just make today is if you have any questions at that point on how to use the portal, if you have any questions now or later today on any other part of this, or thoughts that you'd like to convey, my phone number is on the note also that Bruce sent out, I think, yesterday. I'll just repeat it. It's 202-649-6385. And I'm available. We're here at least for the foreseeable future, and I'm certainly available to answer any of those questions now or in the future. All right. So thanks again. This would be tremendously helpful to us in sort of understanding, I think, what counselors are seeing and incorporating that into as we verify what the servicers are telling us they're doing. So that's all for now, Bruce. Unless you have any questions or unless there's anything that came in while I'm talking, I'll stick around till the end of the call as well.
Yeah, so this is valuable for us. I mean, it's important that we get these cases in. This is we're trying to make enforcement more effective at the regulators, being asked for input and actually giving it and engaging where it needs to get engaged will be helpful about improving enforcement in the future. So, Matthew, we got some questions?
We do. Well, first, just quickly, could you repeat the phone number, please? Your phone.
Yep, sure. 202. I want to make sure I get it right. 202-649-6385.
All right. Now we have a question. If we have an imminent sale...
Just one other point real quick. If people want to email questions to me, they can email those questions to that email address as well, borrowers.files@occ.tras.gov, and that is that's in the note that Bruce sent as well.
Great. And we'll also, after the call, as we always do, we'll circulate an email, and we'll include both your phone number and that email address as well. So don't worry, folks, if you missed that. So another question here. If we have an imminent sale date, October 11th, can you review the case quickly? The homeowner is able to pay the mortgage after overcoming hardship.
I think I would say the best thing to no. But the best thing to do if you're in that situation is to, it's going to take me a second to get to it, but we have our customer assistance group that can respond to those kinds of things quickly. And so you should probably, I will, while we're on the call, I will get that number if you don't have it. And if you submit something to the customer assistance group, you can submit it to me as well at that email address, and I will sort of look after it and sort of see where it is.
All right. And then just one other question is if there are deadlines to turn a trial mod into a permanent mod. I feel like I should know the answer to that, but I don't offhand. Bruce, do you have the answer? Deadlines for converting a trial mod into a permanent mod.
Well, I mean, the HAMP rule is 90 days. I think Treasury's average was substantially higher than that. Is that something that the OCC will look at?
Is the question, will we look at
if a trial mod convert?
Yes, yeah, that is definitely one of the issues. It's certainly one that we've heard a great deal about, and we're very interested to see cases with the people who've had that problem.
Great, send it in.
That's all we've got for questions for Ted right now.
And it's simple. I know we'll get cases about from B of A and Chase and Wells, but getting the other servicers in it will be really helpful as well. And on HSBC, so the way that it gets split is that the HSBC Bank did conventional lending, and HSBC Holding Company or whatever it was handled the household and beneficial piece. So that piece was regulated by the Federal Reserve. The OCC regulated the bank side. The bank side will be more likely Fannie and Freddie loans, and they specialize in one. I don't remember which. And and I think right now that business has been transferred to PHH, but it's still HSBC loans, and you can certainly get examples to them on those cases. But there's a number of lenders, and we want to try to get a spread of all of them. Thank you so much, Ted. We're very interested. And what's the deadline?
Oh, we would love to have these by the 18th of October.
Okay.
Love that.
All right.
Let me. I have the phone number here for the customer assistance group, which is 1-800-613-64. I'm sorry, 1-800-613-6743. Okay.
Okay. Well, let's move on. And so the next topic is around the Treasury escalation line. And a few weeks ago, actually back in August, we had Chris Dove from Treasury on, and Kenesha Wood from Reach in Florida was working with a particular case. She explained it to Treasury people. He recommended that would be a good case to escalate to the Treasury hotline. Kenesha jumped in and did it, and reported back in 2 weeks that there had been no progress on the case. As I recall, it was a loan that had been transferred between Chase and a specialty servicer, and the Chase no longer claimed they had the documents, or it wouldn't release the documents because they've been transferred. The servicer that received them said that they didn't have any of the modification documents, and the client was caught in the middle. It seemed like the perfect thing for Treasury to deal with. Round one didn't go well, but now we have a report back from Kenesha. So Kenesha, are you on the line? Okay, so Kenesha, actually, Matthew thinks that you may be on your computer. We're having some computer problems here, and so it'd be best if you could call in on your telephone and use a PIN number, And we'll, if you're able to do that, Matthew will keep an eye out for your call in, and we will we'll cut in onto the agenda when you come in. So, in case we don't connect, there seems to be some good news here. So we'll follow up if we don't pull this off. For some reason, my computer is down, and I'm so we're having some internet problems here. But we'll do the best we can with what we've got. Okay, so let's see. So I think one of the big issues that we're going to be working on this year, this coming year, is going to be around housing finance reform and housing counseling. Sometimes you hear this referred to as GSE reform. So GSE are the government-sponsored enterprises, Fannie Mae and Freddie Mac. They are, and there's this move to wind them down and replace them with something new. Though there's a counter move right now among some people saying, well, Fannie and Freddie are making money right now, why would we close them down? And, you know, we don't know where it'll all land, but these are major discussions involving many key people in the Senate, in the House, in the White House, and many of the policy makers and think tanks and industry trade groups. And it's an opportunity for us to start thinking about how to integrate housing counseling into the formal structures of the finance industry so that we're not, one of the challenges I think we all have experienced is that people come to housing counseling because they got into trouble and they are not making their payments, or because they made an application at a lender and the lender said, you know, you're not a perfect fit, and you may need to get something to get your place cleaned up. Maybe a real estate agent might refer to you after people have already gotten signed a real estate contract. So often very late in the game. And so the idea would be, is there a way to integrate housing counseling into the home buying process, the mortgage approval process, the servicing process, so that we are kind of a seamless element in this, and just in the same way that people assume that they go to talk to a loan officer about getting a loan, they would talk to a housing counselor about getting ready to buy a house, or if they're in trouble, going to a counselor. So that's the whole idea. You know, we have talked about this idea in different contexts in different ways, but this, but the restructuring of the finance industry is a great way to try to integrate these. We have meetings lined up with leadership in the House and Senate, and at the White House. They are unfortunately completely dependent on whether there'll be a shutdown, whether the shutdown will last. Actually, I shouldn't say that. Some people are still working, so we'll be able to do some of it on the short term. But even if these get delayed by the shutdown, we will work on this this fall, and I'm sure into next year. And we're also very interested in trying to make sure that mortgage credit remains affordable and accessible to people, that that barriers like higher down payments or higher credit standards that don't well reflect the communities we work in, and the way that people save money, or the way that people establish credit, that those things don't continue to be barriers, so that we can solve some of those problems. So this is a way of doing that. So there'll be more on this as these progress. We had Julia Gordon on a couple months ago, who's with the Center for American Progress, and is one of the people who's done some real deep thinking about this, and we'll have more discussions about it. I just really wanted to alert it to you because it's taking a lot of our attention, and if you happen to have a specialist on your staff on this, you know, shoot them our way, because we are starting these conversations right now. Let's see, there are a number of settlements that are in discussion or are happening. And the most prominent at the moment is with Chase, and this is it's with the issue is really that whether securities were misrepresented that were mortgage-backed securities, so directly related to the foreclosure crisis, but we and others in the with the Americans for Financial Reform have been advocating that there be financial relief for homeowners as part of these, and that the foreclosure crisis that was triggered by these kind of problems, the resolutions need to also filter down not only to investors but also to homeowners, and have been really encouraging a variety of ideas. So these concepts that we've been working with Treasury on about trying to get better loss mitigation servicing standards, addressing language access issues, making the reforms that were the servicing part of the National Mortgage Settlement, the AG settlement, getting those strengthened and included in any settlements that come forward. Maybe there's some big ideas like creating a new pool of funds for helping people who have been in foreclosure or bankruptcy to buy a house in the future. So maybe some credit enhancement, down payment assistance, things like that to help especially communities of color and low and moderate income communities recover from the crisis. So really it's a point where we're really just trying to encourage these ideas. We're not at the table of the negotiations. We're simply talking with those that are talking with the people who can do the negotiations, and hopefully some of these ideas will get in there, but we'll keep you informed as they roll down the hill. Bank of America just signed an MOU with the New York AG, which provides a little bit strengthening on servicing standards and enhances some of what's been done for the AG settlement and strengthens a little bit what they do. Wells Fargo actually was sued by the New York AG around these same issues to get a strong enforcement of the AG settlement. So as these roll out, we'll keep you alerted. There are other settlements that are in process, and we're hoping that some of those we can use to create opportunities for helping homeowners and helping create more stability and opportunities for the housing counseling world. A few things that you should just know about in general. The NFMC Round 8 NOFA is going to come out, I guess, starting October 15th, and that's a deadline of November 18th. And of course, that's the intermediaries and the state housing finance agencies are the ones who fill out the applications and submit, but they'll have their own process for including affiliates in there. But they're moving forward. This was something that we encouraged a couple years ago when in the early rounds of the CR to try to get NOFAs out early before you knew what the amount was, so at least the scoring's in place. And NeighborWorks really stepped up on this one, got out early. I know HUD is working on doing the same thing. They did receive the letter of ours encouraging them to do this, among other things. And the word was that the NOFA was in the works, so that's moving forward. There was one interesting thing that I just wanted to share with you all about HUD's NOFA last year. So one of the conversations we had about our letter and decided not to put it in was to do, since the CRs come in a staggered form with instead of a full year funding, a partial year funding, and each one adds a little bit more to the budget. The original suggestion was that the funding then be released piecemeal as the CRs unfold and money becomes available. And for a variety of administrative and practical reasons, groups thought that this wasn't the best solution. But we've now learned what HUD originally had planned last year, which is that they, instead of following the CR, they ended up getting permission from OMB to release a certain amount of money earlier in the year, and then there'd be a second amount when final budget is put into place. And I'm a little unclear if that was $16 million, which is what was in the NOFA, or if it was $20 million, but there was a sum of money that they were allowed to release. And when they did that first NOFA that came out in the wintertime, and they had a smaller amount than what was actually ended up in the final budget, that was meant to represent that money. So they weren't doing the CRs piecemeal. They had gotten some allocation from HUD and from OMB, and so it's possible they may try something like that again this year, and it wouldn't be multiple smaller ones. It would be one, and if the budget caught up with them, it'd be the entire one. So if we learn more about it, I'd be glad to pass it on, but wanted to add a little more color to what we've learned about what the process was last year. HUD has released their FHA qualified mortgage rule, and in some ways it parallels the qualified mortgage rule that the CFPB passed, but it has one significant difference that I wanted to share with you, because I think it gives you as a housing counselor a little bit more flexibility. So qualified mortgages, you probably remember, are part of Dodd-Frank. It has restrictions to prevent loans from being predatory loans, and are both considered to be safer loans and considered to be loans that have less risk for the home buyer in terms of predatory elements. And the way that the CFPB did it was that they would identify if somebody is a qualified buyer would be that their back-end ratio, their total debt DTI, debt to income, would be 43% or less. We had argued that with counseling, people should be able to go above 43% if there were, compensating factors like they were already paying a mortgage or a rental payment that was that put them in a higher than 43% DTI, and they weren't having problems. That there are things that would be solutions. So that did not get into the final proposal. What was interesting about what HUD did was they said that at 43%, they did not make a back-end ratio cutoff. At 43%, under their underwriting manual, if you have a back-end ratio of 43% or more, you then go to manual underwriting. So it could still be a QM loan, but if it gets through underwriting and they've identified that it's not a high-risk borrower, for all the variety of compensating factors that you've got. So the FHA loans will be a little more flexible in the QM field than under the CFPB rule. So thought I'd alert you all this. This is all in the works still. I mean, it's not that it's in effect today, but it will be in the future as they move through this. I guess they were in the comment period on this, so that we'll need to comment on it, but good to know as an opportunity. The FHA Back to Work update. So we have built, and many of you have jumped on to become part of the directory we have for the Back to Work loan program. We had thought we'd get this circulated through HUD, but obviously they're not circulating their notices right now. So when they're back, we'll do that to build a more robust list, and we'll start reaching out to lenders in the next 2 weeks to alert them to the availability of the list. I think there's been a little bit of word trickling out already, so that I know there's been a little bit of activity. We'd love to have more groups on the list so we have more geographic coverage. And if you haven't signed up yet, it's very, very easy. Just go to our website, www.hsgcenter.org. Hopefully you're visiting there regularly. Matthew's writing a blog on there. We have all the latest research on housing counseling and its effectiveness. Actually, there's a study that just came out about messaging on affordable housing that we'll post on shortly as well. There's a lot on the website. We are very interested in making it useful to housing counseling agencies, giving you tools or information that you need. So if there's things you think you'd like to see on the website, we're really, really interested in hearing about it. But there's the directory. It's very easy for you to sign up and put your agency on the directory and or affiliates of your agency. So please get you on there, because I think we'll hopefully start spreading the word more effectively with the lenders very soon.
Bruce, I'm sorry, I'm going to
sure.
interrupt. So we have a few questions and comments. I'm going to start with just one question on the FHA back to work, because that's what we're most recently discussing. But just the question is whether if FHA back to work loan program is voluntary for lenders, or if all FHA lenders agree to participate.
It's voluntary.
All right. And I'm going to bounce around for a second, and I'm actually going to bring Ted back. There's a question about kind of the intersection, I guess, of so the HUD escalation lines are not operating, I guess, because of the furlough. So the person is kind of wondering, I guess, about whether what TED is working on and what the OCC are looking for, if that's kind of an alternative to the escalation process, or if they can use that as a means of escalation, since they're not getting anywhere with HUD in light of the furlough. Are you there, Ted? Is that
Yeah, I'm here. Escalation in terms of
So I guess the issue is that you know, the person has a client who's having, they're not specific, but whatever servicing issue, whatever issue it is, and it's specifically, actually they don't say the servicer, but assuming it's an OCC regulated servicer, and so they're not getting anywhere in terms of getting any recourse, and so they're wondering, I guess, if bringing it to you would be a means of kind of getting some extra help on the case.
Yep, absolutely. So so we have a customer assistance group that is I gave the number earlier, that's set up to do that. But I think also I would the CFPB would probably be the perfect place to have that kind of they have a consumer assistance line as well. I'll look up the number right now while we're talking, but I would call both.
Great. And they did clarify it's Wells, and the issue is that they're having trouble getting final mod paperwork after a 3-month trial or 3-month TPP. So that does seem like the sort of thing that you're looking for.
Well, so this is interesting. So the Treasury hotlines I thought would be working because they should be TARP funded. And so HUD, I was assuming this would be an FHA loan, and maybe that's it, but if it's Treasury, it's great to call the OCC, and Wells is regulated by the OCC, so that all makes sense. That's a good idea. But theoretically, the Treasury lines should be working as well. So if anybody has not been able to get through on the Treasury lines, just post that in the box right now, because I would be surprised. We should know that.
And we will circulate all the different escalation numbers and all of those things after the call in the email. All right. Thank you, Ted.
I think the answer I'm curious, Bruce, to know the answer to that question as well. I would also, our consumer line is available, and the CFPB certainly would be a good place to go with that.
Great, thanks. Then we had just a couple of comments that I'll go through quickly because I think we have a minute before.
Oh, yeah.
One person just made the comment that they find it ironic that HUD essentially endorses and uses housing counseling and has a lot to do with the housing counseling, but doesn't implement housing counseling in their own products. And I guess they are now with the back to work counseling, but I guess this person would like to see it happening more regularly.
Point well taken. I mean, there's a lot of discussion inside HUD about how to make that happen more. And there's a big debate going on every level of policy about whether it's possible to do mandatory counseling or not. And I think the idea that people universally would be counseled is not getting much traction, though on specific products mandating counseling like back to work, that's clearly got some got some real traction.
And then just one other comment, which is kind of ties in with that as well, with the idea of mandatory counseling. So this person says some local banks require first-time home buyers to take a pre-purchase course. However, they are tied to grants, so the client feels obligated instead of actually getting valuable information. So I guess just some concern about when the effectiveness of requiring counseling versus it being voluntary. That's all I've got for questions and comments.
One thing that when you are also submitting cases to the OCC, if you would take a moment also and use the checklist that we've got for the 5 big servicers, which are, so there's the National Mortgage Servicing, National Mortgage Settlement Survey, which is it's a checklist that we created with the National Consumer Law Center to tell the Attorney General's OMSO, it actually goes to the it could go to the CFPB and to your state Attorney General when there's violations of the AG settlement specifically, or fair housing, fair lending violations. And it's a very simple checklist. You go in, you can actually, if you're doing multiple ones, you can upload from HCO or from Counselor Max some of the client information. You establish an account, upload, and then it's just a set of like a dozen questions that you check the boxes off on, and then there's a comment box you can put information in. But that we're sending to OMSO on our own, and then you can, right after you've done that, you can submit it to your state AG, to the CFPB, and other places as well. And that's going to give us kind of a map of what problems there still are out there. And this, again, is specific just to the 5 big ones, which are Chase, Wells, Bank of America, GMAC, and Citi. But if you would do that in conjunction with submitting the OCC, all those lenders overlap there. That would help more in this kind of reforming the process and help us identify problems. Okay. So now we are planning on doing meetings in D.C. on Capitol Hill in 2 weeks, and so we're not going to have the Leaders in Housing Counseling call on the 3rd Thursday of this month. We're going to push it back to the 4th Thursday, which by my reckoning is October 24th. So adjust your calendars. I hate to move things around so much, but we do have meetings with some of the key players there. And we'll put out the notice the Monday before about how to register, and you can register ahead of time. And we'll probably put it out on the note that Matthew puts out before the meeting starts. So one thing that would be very helpful to our work is if organizations chose to join the National Housing Resource Center. We are a membership organization, and you do get a number of benefits from being part of NHRC. So we have this great credit report discount for getting credit reports, the tri-merged credit reports with credit scores. Most agencies are paying anywhere from $12 to $18 for these, and you can get them for $9.75 through an excellent credit provider. And the experience has been very good with them, so we've now road tested it, so that's available to all the members. There are discounts on office supplies. There's access to a number of programs that are being done on the to help you with social media, with website development, things like that. The guide to foundations. There's a variety of things that you get access to by being a member. But really, the reason to join is just to support us building a long-term sustainable advocacy program for housing counseling. And we are kind of day in and day out going to press on every level and every opportunity we can on the national level, and while we can't be on the local levels, we're going to encourage groups to do work on the local levels. And I do speak to state networks and local gatherings, and I'm happy to do that if you've got ones as well. But this is a moment where we can change the way that our business functions, and rather than being an add-on, we can really build ourselves into the home buying process, the servicing process, hopefully financial education. We're trying to get some ideas about how maybe financial education can be better funded going forward, so that it helps organizations cover that part of it, because there's really no good source of funding for most of the organizations out there on this. There's just lots of things we can do, but it really depends on us being kind of organized, motivated, pulling together. We're very pleased with the amount of participation people are doing on these calls. It's unusual to have a call without 100 organizations represented on it. You guys are a very important political force in this country, and we've got to figure out how to tap into it and make it a more effective voice out there. So there's a lot we'll be doing this upcoming year. Would love to have you in as a member. These calls will always remain open to people. You don't have to be a member to participate in them. We'll continue to offer services to the entire industry. I think the viewpoint is that, we want to be there to make the industry bigger, broader, healthier, and more exciting to work in. But, everybody kind of pulling together and joining helps move that forward. Membership forms are on the website. Shoot me an email. I'll be glad to send it to you as well. Shoot it to Matthew, and he'll be glad to send it to you. We'd love to have more groups join and help with the good work we do out there. I think that's it for today. I think it's the first time we're closing on time. But thank you very much, everybody. Remember that the next one will be in 3 weeks. You'll get there'll be some steady stream of emails coming from us about opportunities as they arise, and some updates on the OCC reporting. And as a reminder, if you've got some really bad HSBC cases that are household finance or beneficial finance type loans, especially with the people couldn't even apply for the 6 months, or who are NPV positive, or people who could apply but only got 2 or 3 bites of that apple, we're going to deal with HSBC directly on some of these loans. And if you submitted them to the Fed, that's great. These could all be a good mesh for that. So let us know if you're interested in that. Okay, so that's it for today. Thanks so much, everybody, and we'll talk to you soon.